Hi guys, it's Ivan Trade. Today we are on Monday and we are on 14th of July 2025. I want to make a trade recap on a trade which I took on gold, and I want to clarify my thought process on how I ended up taking it and what became of it. My trade idea was invalidated, and I want to go through a little quick top-down analysis and share with you my thought process on how I took it and what I think is the reason why it didn't play out the way I thought it would, and so you can learn from me, or hopefully I can learn from you as well in the comments. So let's get right into it. As you can see on the high time frame, on the weekly time frame, you can see that we have a lot going on this I think it's last week of June, which happened on since Monday 30th. Was swept during the previous week, which opened on Monday 7th. So going into this week, I was anticipating some kind of bearishness, but inside of this bearish momentum, I didn't expect it to be this quick, because as you can see, there is such a very bullish reversal, even though we swept this high and closed within this range. But this previous week had a very bullish momentum towards the upside, so I was anticipating the price to still reach into the buy side of this candle, at least with I was anticipating continuation towards those high. So by keeping that in mind, if we can go to the 4-hour time frame, you can see a little bit more clean picture of what was happening. So I drew the range of the previous day. Specifically, if you go to the daily, you can see that I drew out the 50% of Friday's range, which was a very expansive move, which created the high of the previous week. As you can see, this is the previous week's high right here, and this is the early week's high, which was formed on Thursday of the previous week. So I was anticipating a continuation to the upside, specifically if the price could form a low inside of the premium of this range right here. I would anticipate a continuation to the upside, but here is the catch. Right here we do not have any PDRA which we could go back inside of the range off of, except this early week's high, as well as the previous week's high, which is also the Friday's high. So meaning that we would likely see a continuation to the downside if we only rejected these highs early on. So on a daily, after I was anticipating this, if I could see a PDRA which is in the premium of this Friday's range, I could still ride it to these highs right here, which were engineered over there, specifically noticing that we had a very little bottom wick which could support an expansion to the upside, and keep in mind that we didn't have any major news today. So when the price on the open of the 4-hour candle of 6 a.m. opened low after making this slight SMT right here on these highs, and it was a little small range SMT, even though it is a candle to candle, but we formed a change in state of delivery to the sell side right here. We closed within the range, but you can see the idea, and if you see even closer on the silver chart, you can see that this low right here was never taken by the time I was recording the trade, which I think you already seen just now. By the time this low got taken out, I think this internal low which creates this 4-hour fair value gap was taken on gold. The silver was still lagging behind, so there was specifically no specific way of testing or gauging the momentum if the price could still dig into this fair value gap or even invalidate it. So the only thing I could do right here is to go to the 15-minute time frame to see if I can confirm this 15-minute fair value gap. So when I dropped down, you can see that I got caught up in this retracement. It was just a retracement, and I will tell you a little bit soon why I think this was a retracement, but in retroverse, or of course, because the price action has already done what it should have done. And I'm just framing my thought process on how to better recognize this. So when these Asian lows were taken right here and price closed below them on the 15-minute time frame, I already marked out this as changing state of delivery. So I clinged to my bias a little bit, because this low right here formed pre 9:30, and I assumed that we were likely going to have a low resistance liquidity run to the London highs, which you can see that I marked out as buy side. No, it's the AM highs, the 90-minute cycle high on AM. So if you can see this low right here, you can see that it was never swept out just yet on the silver on the same candle. So what I think I didn't do right or even care to recognize was that this was simply a retracement after price respected this 4 hour candle. Let me scroll back to a 4 hour chart a little bit so that you can see where we were reacting. Maybe it's on 1 hour. We were respecting the premium of this hourly candle right here very nicely. So we rejected it off once and price immediately spilled to the downside once again. So that was a continuation signature which I didn't take note of, but also there was no high time frame cycle except that this low was the low of the Friday's PM session. So it is a time cycle SMT, but it wasn't within the overall context of this or price action. So the other fact to note in mind is that if I can draw the open of 12 AM right here, let me make it red so that you can see it, and then drop down to the 15-minute time frame. You can see that price was just retesting the midnight open, which is right here on this down close candle, and there are a couple of open important time right here. I think there is also 8:30. No, this is 2:30. I think 8:30 is around right here. So let me mark it out, and I bought below the midnight open, but my bias was simply wrong. And you can see that then 9:30 was right here. So you can see that I tried longing below the midnight open, and essentially I missed a trade right here because according to my strategy I could have entered on the open of this candle right here, and my stops would have been right here on this low at least, and target 122, which wouldn't have panned out anyway, but it is what it is. So I could have entered right here a little bit lower, but I entered on these weeks after I missed out on the open of this candle, and I tried to catch this candle right here. Reason why I kept being confident in this horse setup even though it was reversing on me was that price was pretty much respecting the high end of this candle, and when price closed below it, I could have sincerely closed my full position once I seen this candle closing this dip, because that will mean that price is likely going with me out even if it could continue up. So that was it, and I didn't try to re-enter because it's just not the best thing to do after price stops you have after weekend in the daily true open, and you are simply guessing, or if you can't recognize that you are in a retracement, that's a problem. So I think that is the mistake I made. I recognized that I was in a retracement a little bit too late, and it costed me this one trade, but it's just one transaction which doesn't hold a real value inside of thousands of other trades which I will take. So that was it. That was my thought process on how I took this trade, and you can see that I did took an L on it on this prop farm which I'm running right now. It's a 5k, you can see it, and yeah, I think that's pretty much it. And even on the trade locker, even though this prop I really am tired of it because I can't seem to pass on it, and I'm in a deep drawdown. You can see how much red is around here. Shit is scary as hell. So I think that's it for now, and right now it's 4 p.m. and tomorrow I have a lot to do. I have to wake up early, so I gotta go back, and I guess I will see you next time. It's Ivan Trades as usual, and I guess you have learned something new. Don't try to force reversals. If you can recognize that you are forcing reversals, or you are trading retracement, which is usually a low resistance liquidity run, you can see also how this fair value gap right here was just closed below as if nothing even happened. This one right here, which is a BC. So after the close of this candle, I should have this 10 a.m. candle. I should have already gotten out, but yeah, clinging to a position is the worst mistake, one of worst mistakes which I am guilty of. So you better not do the same. This is a clear continuation to the downside, and yeah, I learned from it. If PDRAs are not holding, you have no business holding the trade, because you are simply chasing dopamine, which is not the right thing to do in the market. So thank you guys for sticking around till the end. It's Ivan Trades. Happy trading, and I'll see you in the next one. If you haven't yet joined my free Telegram channel where I share my insights and how my learning journey is going, make sure to check it out. It's Ivan Trades channel. Yeah, I think that's it. Thank you.